Eventually, it was bound to happen. A high-ranking whale has secretly amassed XRP Ripple currency valued at more over $500 million. Wow, that's awesome. To top it all off, XRP holders have the potential to become millionaires in the near future, according to analysts. In terms of significance, that video is unparalleled. You should not pass up this opportunity. You won't believe it. Important notice. XRP within the cryptocurrency world, Ripple has consistently generated considerable interest and debate, with a market valuation that puts it among the most valuable digital assets. The fact that XRP piques the interest of both individual investors and large financial entities, commonly known as whales, is hardly surprising. Those who possess enormous quantities of a single cryptocurrency known as whales are able to significantly impact market dynamics. A noteworthy individual in the cryptocurrency industry, Molly Elmore, recently tweeted about an intriguing new development. Over $500 million worth of XRP was bought yesterday by a huge whale as other coins crashed in value. Do they have information that we do not? Not only does this comment get people thinking, but it also explains how whales are becoming more influential in the cryptocurrency market, especially with regard to XRP. With their enormous volume of transactions, whales intentionally control the cryptocurrency market. They can cause huge price fluctuations in cryptocurrencies like XRP by buying or selling in bulk, which may impact how smaller investors act. For reasons of both fear and greed, other whales will frequently follow a breaching whale. This herd mentality can cause prices to spike or plummet unexpectedly, a phenomenon known as pumping and dumping. The recent acquisition of more than $500 million worth of XRP by a huge whale may be an attempt to artificially inflate its price. Demand is stoked when a whale makes a purchase of this magnitude, cause the cost to rise. The value can go up even more if other investors notice the price going up and decide to get in. Because of this positive feedback loop, the price keeps going up as more and more investors get in on the action. On the other hand, individuals who invested at the peak could lose a lot of money if the whale decides to sell their shares when the price is too high. I find quite interesting the notion that XRP is decoupling from the cryptocurrency market as a whole. As a general rule, the general mood of the market dictates how the various cryptocurrencies will perform in respect to one another. The apparent decoupling of XRP from its price may indicate that influential actors are making deliberate maneuvers, have insider knowledge, or are anticipating news that could affect the price. Investors seeking stability or a hedge against the volatility of other cryptocurrencies may find this decoupling attractive, since it suggests that XRP is becoming more independent of the overall market movements. In the crypto realm, this kind of thing happens all the time. Insider information, predictive algorithms, or even just a deeper comprehension of market psychology are just a few examples of the ways in which whales possess information that the ordinary investor lacks. Possible justifications for the $500 million acquisition include regulatory clearance, a new Ripple cooperation, or increased use of XRP and international payments. What's happening is just insane. Crypto whales' recent actions have experts talking, and the projections they've made are just mind-blowing. You are not going to want to miss this, because XRP is about to do something that you will not believe. It will be just breathtaking. The token has entered a stabilization stage following an 18% intraday increase on August 7th, and analysts and traders are carefully watching its next move. Although XRP is encountering strong opposition near the 64-cent mark, the long-term prediction for the cryptocurrency is far from negative. Actually, veteran traders like Michael XBT foresee an even more encouraging development in the near future. Famous crypto trader and longtime Bitcoin investor Michael XBT has an audacious but well-considered prediction for XRP's future. According to him, XRP has been forming a pattern since the token's precipitous decline from its all-time high of over $4 in January 2018 and is now trading inside a huge 7-year symmetrical triangle. He claims that XRP is about to break out of this trend, which might occur as soon as this month. Now things start to become interesting. Michael XBT is more measured than some of the other more enthusiastic forecasts. He doesn't think XRP will have an irrational surge in value, with a $2 price objective. As compared to where XRP is now, this aim represents a 254% rise. The benefit is substantial, yet it is based on reasonable assumptions. Investors like Michael XBT stand to gain a great deal if XRP is able to achieve this $2 aim. At the present pricing, his holdings of 1.3 million XRP tokens are worth almost $750,000. He would have made $1.5 million, an extraordinary return by any measure, if the price were to rise to $2. For individuals with a well-thought-out plan like Michael XBT, this shows that a large investment made at the right time can yield huge returns. Not only does Michael XBT's forecast have profit potential, but his research is also conservative, which makes it stand out. His approach is novel in a market where consumers frequently have inflated expectations and are led astray by hype. Although he is aware of the buzz over XRP, he cautions against expecting a 100x return from the token in a single day. He warns that people should not expect a 100x pump from XRP and stresses the need to set reasonable targets after conducting thorough market research. Although many market analysts share Michael XBT's belief that XRP is about to reach a turning point in its trading pattern, few can match his level of conviction in his forecasts. Michael XBT has set a $2 goal for XRP based on the likelihood that it will break out of its long-term symmetrical triangle, even while other experts are predicting wild speculative gains. A breakout may be imminent, according to his prediction, since this pattern is frequently considered as an indication of future market movements. The case of Ripple vs. SEC deserves our full attention. I assure you this is not your average court struggle. This could change the course of XRP's future, as it is a positive indication. You can miss out on your chance to get in on the crypto revolution that's about to happen if you wait too long. Do not pass up what may be your once-in-a-lifetime opportunity to become filthy rich. Not only does Ripple's recent victory in the Ripple vs. CCC litigation signal a turning point, but U.S. District Court for the Southern District of New York Judge Annalisa Torres recently handed down a ruling that might significantly alter the trajectory of digital assets in America going forward. This legal dispute has dogged Ripple for almost 3 years, with the central question being whether or not the sale of XRP by the company amounted to an unregistered issuance of securities. Investors and industry insiders have been keeping a close eye on this issue because of the far-reaching consequences it could have for the cryptocurrency sector as a whole. The selling of XRP by Ripple to institutional investors does in fact breach federal securities laws, according to Judge Torres' important ruling. Despite the fact that they were investment contracts, Ripple neglected to file these deals with the SEC. When sold to institutions, some cryptocurrency assets may be considered securities and so subject to the SEC's restrictions as stated in this section of the opinion. The verdict did, however, provide some much-needed comfort to Ripple and the digital asset market as a whole. Institutional sales and retail sales were clearly distinguished by Judge Torres. She came to the conclusion that selling XRP on secondary markets to individual investors did not qualify as a transaction involving securities. The secondary market and regular investors are shielded from the strict rules that govern institutional transactions by this distinction, which is of paramount importance. It appears the court understands the significance of encouraging innovation in the cryptocurrency market while yet ensuring regulatory supervision, given the distinct characteristics of cryptocurrencies. Compared to the $2 billion that the SEC had originally requested, the $125 million civil fine that Ripple was compelled to pay is far less. The court found that Ripple's repeated activities did not constitute fraud or misappropriation, therefore reducing the sentence. For whom a more severe monetary sanction may have been appropriate. Additionally, the court rejected the SEC's request for a general prohibition on institutional sales of XRP and instead issued a narrow injunction that forbids Ripple from violating securities laws in the future. These rulings have far-reaching consequences. With the SEC case out of the way, Ripple can keep doing its business as usual, especially in the secondary and retail markets, with the lawsuit's ambiguity starting to fade. XRP's market value and transaction volumes have benefited from the fresh information. Although the SEC may yet contemplate an appeal, Ripple's choice not to does indicate its preparedness to proceed. What are your thoughts on that?